Today's financial market update, the most important market insights and investment ideas you need to know. Market sentiment is bearish, moderate. Market is declining across major indices. Index performance, S&P 500 at 9.2%, Dow Jones at 1.3%, NASDAQ at minus 1.1%, Russell 2000 at 2.41%. Duke Energy Renewables LLC, DRW, experienced an astonishing surge of 70,900%, reflecting strong advancements in the renewable energy sector. Duke Energy's remarkable growth signals a robust investor appetite for renewable technologies, indicating a potential long-term trend in sustainable investments. Consider investing in Duke Energy, DUKRW, to capitalize on the surging interest in renewable energy and its long-term growth potential. The S&P 500 declined by 0.99%, closing at 7,427, driven by a significant sell-off in the tech sector. The decline in the S&P 500 signals investor unease, particularly in technology stocks, as inflation continues to pressure the economy. Investors should consider diversifying portfolios to include defensive stocks that typically perform better during inflationary periods. Southwest Airlines reported record Q1 revenue of $7.2 billion, despite laying off 75 employees amid rising competition. The robust earnings from Garmin and BDX signal positive momentum in their respective markets, suggesting potential stability for investors. Consider investing in Garmin and Becton Dickinson, as their strong financials indicate reliable growth potential in their industries. Consumer confidence indexes have dipped to 98.5, reflecting growing skepticism among households about economic stability and spending. The decline in consumer confidence suggests that households may tighten their budgets, signaling potential slowdowns in discretionary spending across various sectors. Consider increasing positions in essential retailers like Walmart, as they are likely to benefit from shifting consumer priorities during economic uncertainty. The effective federal funds rate holds steady at 3.64, reflecting stability in monetary policy from January to April 2026. A stable federal funds rate of 3.64 indicates the Fed's commitment to fostering economic growth, which can boost investor confidence. Consider investing in sectors such as real estate and consumer discretionary, which often thrive in low borrowing cost environments. Inflation has surged to levels not seen in decades, reaching approximately 8.5% year-over-year as of September 2023. The combination of high inflation and increasing interest rates signals a challenging environment for economic growth, impacting consumer spending and business investments. Consider diversifying portfolios to include inflation-protected securities, such as TIPS, to hedge against rising inflation risks. Oil prices are experiencing a surge due to geopolitical tensions, leading to increased market volatility. The rise in oil prices indicates potential inflationary pressures, which could affect consumer spending and broader economic health. Consider increasing exposure to gold-related investments, as Newmont's performance could attract more capital into the sector. The 10-year Treasury yields have exceeded 4.5%, indicating heightened borrowing costs and investor concern. Rising Treasury yields typically signal a shift towards safety, prompting investors to reassess their exposure to riskier assets like equities. Consider reallocating portfolios to include more defensive assets, such as U.S. Treasuries, to hedge against rising interest rates and inflation. Tensions in the Middle East escalate as Trump threatens military action against Iran, influencing global oil markets significantly. Investors should consider the implications of rising oil prices, as they may lead to increased inflationary pressures across global economies. Consider increasing allocations to energy stocks or ETFs that are likely to benefit from rising oil prices and heightened geopolitical tensions. Oil prices are rising due to geopolitical tensions and falling stockpiles, raising fears of an energy crisis. The surge in oil prices indicates increasing demand and potential supply constraints, which could affect energy costs for consumers and businesses alike. Consider investing in companies involved in energy consolidation, as mergers like NextEra's could lead to enhanced market positions and profitability. NetEase Inc. is facing stricter regulations while aiming for global growth, with earnings expectations set for Q1 2026. The regulatory environment in China could lead to heightened volatility and investor caution regarding U.S.-listed Chinese companies like NetEase. Consider diversifying into U.S.-listed Chinese stocks, particularly those demonstrating adaptability like NetEase, to capitalize on potential international growth. Bond markets are experiencing heightened volatility, with Treasury yields rising significantly amid inflation concerns. The increase in Treasury yields indicates a shift in investor sentiment, potentially leading to higher borrowing costs and affecting credit markets. Consider reallocating investments towards companies like MarketAxess that are innovating and adapting to the evolving bond trading environment. CoStar Group reported a 23% year-over-year revenue growth, but faced an EBITDA loss in its residential segment. The significant revenue growth at CoStar suggests strong demand in commercial real estate despite challenges in the residential sector, signaling a shift in investment focus. Consider reallocating investments towards self-storage facilities, as they demonstrate resilience and stable income potential in uncertain economic conditions. First Football recently sold a 25% stake, valuing the team at an impressive $9.9 billion. The substantial valuation of First Football suggests strong market confidence in high-profile sports investments, signaling a potential trend for future deals. Consider diversifying portfolios by increasing exposure to technology and AI sectors, which are currently attracting significant investor interest. Yum Brands is deploying NVIDIA-powered AI technology across 500 restaurants to enhance operational efficiency and customer experience. The integration of AI technology by major companies signals a fundamental shift in operational strategies, indicating strong growth potential in the tech sector. Consider investing in companies like Yum Brands and Marvel Technology, which are actively leveraging AI to drive efficiency and profitability. The Clarity Act was recently passed by the Senate Banking Committee, marking a significant step towards regulating crypto assets. The passage of the Clarity Act indicates a more structured approach to regulating cryptocurrencies, which could alleviate uncertainty for investors. Consider allocating a portion of your portfolio to crypto assets, particularly those compliant with emerging regulations under the Clarity Act. NextEra Energy is negotiating to acquire Dominion Energy for $66 billion, marking a significant shift in the energy landscape. The potential NextEra-Dominion deal signals a consolidation trend in the green energy sector, likely attracting more investor interest and confidence. Consider focusing on large-scale green energy companies like NextEra, which could benefit significantly from the Dominion acquisition in the long term. Thank you for watching FERPA, your financial Sherpa.